You have undoubtedly heard by now from the likes of Grant Cardone, Ken McElroy, that one of the greatest generational wealth building opportunity is in front of us. A lot of these big timers are talking about the huge multi-million dollar apartment buildings. I actually want to step back and say, you know what? What can the average mom and pop investor do to take advantage of what's coming? I'm going to have this conversation with the one and only Jonathan Twombly. How you doing, sir?
I'm doing great, Michael. Good to see you.
Absolutely. So I know both you and I are excited for the opportunities are ahead. You and I have experience and can see it coming. But if you're a newer investor, or maybe you've only dabbled in single family homes or duplexes, but you want to perhaps go a little bigger, what would be some things you could do now to get ready to see and take advantage of what at least we think is coming?
Well, I mean, there's a lot because I think that uh, the news focuses on the big deals and the big guys, right? But what's happening there is happening just at a smaller scale everywhere else, right? So just as there was a frenzy around, bigger real estate deals, bigger multifamily deals that had weird debt structures and everything else, the same thing happened at lower levels of the business, right? And so they're going to be, and frankly, I think there's probably a lot less sophistication at the kind of lower levels of the business. So there are probably a lot of people who bought deals without doing any analysis at all on some very simplistic, kind of uh, thought process, like, oh, I know this neighborhood is getting better,
Yeah.
or
Yeah.
a Starbucks just moved in, or something, or I heard about a factory 5 miles away from here that's
Mm.
open up, right? And so, um, based on like just the kind of conversations that you hear people talking about all the time who don't have a lot of sophistication in real estate and don't do any analysis. So I think what you're going to find is, even though maybe there isn't the same problem with like variable rate debt bringing people down in some of these smaller deals because the banks might have been more conservative and offered less leverage and things like that, there's still definitely going to be people who overpaid for the property, didn't do the right analysis. Things are way more, expenses are higher than they thought, all of the usual stuff. And I think there's going to be opportunities to pick up deals from those people as well, because I think the banks are going to be taking some deals back or forcing some sellers to sell. And like you've mentioned, Michael, banks, even for performing loans, just not wanting to renew them because they've got enough exposure to multifamily on their balance sheet and they just don't want any more. Or they've got issues with other assets that are cratering that that are not multifamily. They've got office loans on their books or other things. So they're just kind of marshaling cash. I think there's going to be opportunity at all levels for for uh, for people to buy, and there are going to be fewer buyers in the market. So all of the normal stuff that happens too, all of the divorces and deaths and partnership breakups and all those things that normally happen, are there are going to be fewer people competing for those deals as well. So there's going to be a lot of opportunity, and you've got but there are certain things you need to do to get yourself ready for it. But I'll take a break here because I know
Yeah. Yeah,
yeah.
I love this concept because again, we'll break it down on activities. I want to test an idea with you. I think it's been a long, I don't remember who said it first. It was obviously some rich guy. He basically said, "Hey, if you got $1 million in debt you're in trouble, it's your problem. But you got $1 billion in debt, it's the bank's problem." And
Yeah.
what I mean by that in this context is there are probably some very large operators with huge debts that are going to get preferential treatment, extend and pretend, because they don't want to take that large haircut. Where if
Yeah.
you're just an individual owner who overpaid for an 8 unit, who has one loan, they're going to be like, done, get off our books. We'll take the 17% haircut. We're going to worry about this big one. Does that seem reasonable to you?
Um, I mean, it seems plausible to me. I could see the banks also saying this is also a headache that we just don't want to deal with, right?
Mhm.
It's small potatoes. But I think you're right. I think it's more likely that if the banks are going to start foreclosing on stuff, or forcing sellers to sell, it's going to be those guys, and not the people who really cause a big headache or problem for the bank. So I would agree with that.
Yeah, and also the bigger the investor, the more lawyers, the more things they could do to fight, extend cost of it's just a bigger mess. So yeah, I mean that was really part of the conversation. I think it's been 2 years, might have been 18 months. I went to a bank with, the yearly financial statement and he pulled me aside and said, I can't renew half those. I should call him back and see what this
Yeah,
year looks like.
you really should
Uh,
call them back and find out what happened, because I'd be curious to see whether they did renew those people in the
yeah,
end.
like
I mean,
maybe. Yeah.
it'd be good to follow up with that and just find out, you know, what happened. And who knows, you might call them back and you're like, really? I don't remember having a conversation.
Yeah, I never said that.
It's like, either that or he like legit forgot. Like, really?
Yeah, yeah, yeah,
But
yeah. It's
but
possible.
yeah, yeah. I mean, I'd love to hear more. But yeah, I mean, listen, it's funny. Like, I'm involved in one deal where the we have this issue of like variable rate debt. It's not my own deal, but it's a deal I'm a partner in. We have, you know, variable rate debt, all that sort of stuff on there. And, we have a whole strategy for working with the bank, right? To get the bank to kind of do what we want. And that's because this is a sophisticated group that, they have a lot of expertise. There's lawyers there, and they have a lot of like resources to draw on in terms of how to approach the bank. So now we've started negotiations with the bank, and they're going well because we've kind of got all our ducks in a row. I think for a lot of smaller players, they're either they don't know what to do in that situation, or they're just going to put their heads in the sand and do
Yeah.
nothing. I mean, frankly, there are a lot of multifamily operators who have their heads in the sand now too. And every time I hear it, I'm just shocked. But but I think it's more likely where you're kind of dealing with smaller, an owner who this is not how they make their living, right? They have a job, they have some units on the side, they
Right.
kind of bought into the hype, and someone like that, maybe tearing their hair out, but they don't really realize that there is a way to approach the banks,
Mhm.
and um, there is a way to kind of at least improve your chances of getting what you need from the bank. So I think those deals are going to be coming to market, and should be ready to.
Yeah.
You know,
So now let's talk about some things that people can do today to get ready. Because I think it's fair to say that at least in my markets, the pain's not there yet, right? I'm starting to see signs that some things could be brewing, but this is going to be a long fuse. I think one of the first things I'm going to be noticing, and again, I go back to 2010 after housing bottom, then commercial came next, right? They were serial, they were not at the same time. And what I saw first was a spike in listings,
yeah,
right? And I think that's important, right? This is not like a house where you live in where you kind of ignore the letters and, suddenly you're going to be foreclosed on the courthouse steps. Nobody knows. These sellers are going to be given, or these owners are going to be given time. And I think the first thing we're going to see is, small multis 5 to 40 listed on the MLS or LoopNet or Crexi or wherever they go, and they're likely to be listed at wish pricing.
yeah,
And then days on market are just going to grow and grow and grow. And I say this again with experience because one of the largest buildings we bought last time was listed for 18 months.
yeah.
And we ended up buying it for 50% off once it went back to the bank. But it was listed at 1.4 for 18 months. The bank took it. We negotiated directly with the bank and bought it for 700. Um,
So
so that's the first thing I think.
yeah, and I mean, I just you made me think of something which I forgot to mention. You know, so when you were talking about the homeowners ignoring the letters from the bank, right? They may, if they get foreclosed on, maybe they're out their equity, but this is all non-recourse debt in most cases, and they're just going to walk away, hand the keys to
Yeah.
them. And plus, they also know that, like, you know, courts don't like to foreclose on people's houses, right? It's
There's
different.
forbearance programs extended out to 2025 now. There's lots of ways to fight it.
Yeah, there's lots of ways to find it or buy time or come up with the money, and you can run in at the last minute with a check in your hand in the court, and the court is going to stop the foreclosure, right? So, but for commercial, it's different. And so the thing, not only is it different, but for small multifamily deals, if you're dealing with local banks, this is recourse debt, right? So that is why these sellers are going to be anxious to list. right? Because
Yeah.
they are not going to want to be on the hook for the deficiency. If let's say you've got $1 million, well, $1 million, you could be an agency debt and it's different. Let's say you've got $500,000 of debt on the property, right?
Yep.
Now the property is worth 400,000, right? If you, unless they can work out a short sale with the bank, then if the bank forecloses and sells it for 400,000, they're still on the hook for 100K.
Yep. Recourse. Yep.
So, because it's full recourse, right?
Mm-hmm.
So, uh, so that means that they're going to be listing. There's going to be a lot of stuff coming to market. If that
I agree.
happen, right? Because they can't really ignore it because they've got recourse on there. So, in terms of like getting ready for this, I would say that there are a number of things that you should be thinking of and getting ahead of. One is you want to start positioning yourself strongly right now. So that means pay off your debt. If you're carrying credit card debt or whatever,
Yeah.
any debt that you can pay it off, because you want to get your credit score as strong as possible, because that's one of the big things the banks are going to look at, right? So make sure you got that credit score in as like tip-top shape as you're able to, right? And then the next thing obviously is you want to start saving some cash up because you're going to need a down payment still. And then the other thing is that you have to understand, I think a lot of single family home buyers don't understand this piece of multifamily, but whenever you're dealing with a commercial mortgage, and that's going to apply to any property that's 5 units or more, what the bank is going to be looking at is your net worth, right? Rather than your cash flow. So it's going to be obviously like they're going to look and see what kind of credit risk you are. They're going to want to make sure that you can pay the loan in the instant. If the property can't pay the loan, they want to make sure that you can pay the loan. But also, because these loans are recourse, they want you to have a net worth that's equal to or greater than the amount of the loan, right?
Yep.
So that means that if you have a $500,000 net worth, I don't care if you have, let's say it's all in cash. You've got 500 that your bank, you rent, you have nothing to, you don't own anything, and all you have is 500K in the bank, right? You cannot go to a bank and say, hey, I want to borrow 1.5 million to buy this $2 million property because I've got 25% down.
Yep.
They're going to be like, sorry, we can lend you 500K, right? Because that's your net worth. So you have to understand that that's how lending works in commercial. So focus appropriately is what I want to say. Don't waste your time on deals that you can't buy. Right now, there's one thing you can do. You can join together with 4 other people and you can pool your net worth together, and the bank is fine with that. They just want to know that if they have to foreclose and they have to sell the property for 0, that they can collect their whole loan from you, right? Or your partners. So just get those things ready. And then another thing that's very helpful to do is think about, Michael and I have talked about you going and talking to bank officers now ahead of time, getting to know them, build that network. But another thing you really ought to be doing is think about like the loan that you want to get from these guys, or even if it's a foreclosure, they want to, you want to convince them to sell it to you because you're a better risk than the guy they're taking it from. Think about this like applying for a job, right? You want to have your resume ready to present to these lenders. So you want to put together a little kind of essentially a resume that outlines, your business experience or your financial wherewithal or whatever, has a personal financial statement in there that you can go give to the bank and show them, rather than having, you don't want to walk into the bank officer and then have him say, well, can you really afford this loan, right? Walk in there prepared. Give them the stuff that they're going to ask for ahead of time. It's just going to show that guy that, wow, you're really on top of things. It's going to instantly create credibility for you with this loan officer if you show up prepared like this. So get your stuff ready ahead of time. Like get your finances in order, get your resume together, get your personal financial statement together, right? Have the backup documents there. They don't always look at them, but like be prepared if the guy says, because usually you hand like a PFS, personal financial statement, it's an Excel spreadsheet, but eventually they will ask you for the backup, right?
Yep.
Walk in there with the backup. right? If your stock portfolio is X, like have your most recent,
Yeah.
you can walk in there with like print out the Zillow report on your house, print out, the Zillow if you have a second, whatever your assets are, walk in with your stock, your latest statements from your stock portfolio. And if you have Bitcoin, like however you prove whatever you got,
Hmm.
walk in there with that stuff so that you can hand that package to the lender and he's going to be like, oh, all right, you're prepared.
Yeah.
And it's going to make it a lot easier for you. Then when those deals start coming down the pike, you know, you're going to be ready to go and they're going to look for you. And obviously then you got to, as Michael and I have said all the time, follow up, follow up, follow up, right? You got to
Mm.
keep them, you know,
Yeah.
call them once a month, whatever, just to chat, say hello, ask them how their dog is, whatever it is, like just, you
Yeah.
know, like
Stay
keep them.
top of mind. Yes. Yeah, absolutely. I guess there's a couple of questions that I want to kind of relate single families to commercial. So obviously, single families, you just mentioned Zillow. Zillow allows you to not only see an opinion of value, but for me, it allows me to go back and see what somebody paid for it.
Yeah.
Is there something similar? Is it Crexy? Is it LoopNet? How would I go back and find what somebody paid for an 8 unit? Because that's
Um, you
probably
would
not in
have
Zillow.
you would have to do a title search for that.
Okay.
I mean, that's out there. That information is out there, but there is no MLS for commercial property.
Okay.
So it's going to take a little more digging, but you could find that out. You can find out how much the loan is, right? Because that's public as
Yeah, that
well.
was my next question. In again residential, there's the software called Propstream that has a lot of data, including loans and dates and things of that nature. So probably not in Propstream, an 8 unit building, but the data's out there. You can find it. Sounds like.
Right, but for 4 units, it'll be in there because that's
Yeah,
considered
Resi will be in there,
residential,
right?
right? So if you're looking for quads, then that
Should be there.
information will be there. Another thing, you touched on this briefly before, and I wanted to flag it. So, one of the best ways to find a deal, a multifamily deal that is going to be overlooked or underpriced is if you find it on the MLS, right? If you find, because it shouldn't be on the MLS, right? And the
Hmm.
only way it's
Yeah.
going to get on the MLS, and even to some extent, or if you find it on Trulia or the other sites like that, they're primarily single family house
Hmm.
sites. The only reason you'll find it there is because the person who owns that property is very unsophisticated and doesn't know that they need to go to a commercial broker. They're
Right.
just going to like their buddy who's the broker or their spouse or their friend or their cousin. Like they're going to just the person that they know who's a broker, and they don't understand that they need a commercial broker. And that broker doesn't really have a list of commercial buyers, and they don't know what else to do with it, so they stick it on the MLS, they put it on Trulia, maybe they stick it on Crexy, maybe they stick it on LoopNet, but they don't have a list of commercial buyers. So
Right.
that property is also very likely to be overpriced because that commercial broker, sorry, that non-commercial broker is going to say, I don't know how to price this thing.
Yeah.
What do you want?
Exactly.
What do you want for it? And that seller is going to give them the pie in the sky number, right? So they're going to stick it on the site at a price that doesn't make any sense, and it's going to sit there. So if you find, I'm telling you, you're not going to see a lot of these on the MLS, right? They don't
Hmm.
come up that often. So this is kind of like a being patient kind of game here. But if you're in the habit of checking the MLS every day anyway,
Yeah.
like and you see one of these deals on there, like, you know, go after it, because if it's there, it's just a sign that that is probably a mispriced asset. And
Yeah.
even if it's pie in the sky pricing, it's probably going to just sit there, and you may be eventually able to get it for a decent price.
No, I think that's exactly, kind of the insight I want people to get. If you do see it on your local MLS or Zillow or Redfin or any of these kind of resi sites, I agree with you. It's going to come out overpriced. It's going to come out with what I call wish pricing. Um, but also what that tells me, again, just with experience, is the pressure has started. It's not great. It's not horrible at the moment, but something is causing that seller to list. And he's probably on a clock, probably has at least a 6 month window. There will probably be some extensions. Again, that building we bought was listed at 144 for 18 months. No price drops, couldn't do it. Had to get that number to pay off the debt. Eventually couldn't get it sold. Bank got it. We negotiated directly with the bank and got it for, a little bit less than 50% off because the bank, it was destroyed. But yeah,
So
the other thing to point out is if these units are listed, remember that these buildings will be in their best shape the day they're listed. Because if the seller's truly in trouble, you're not going to see capital expenses. You're probably not going to see maintenance. They're gonna bleed that thing dry, in my experience.
good point. So when you bought that building out
Mhm,
of foreclosure for
mhm.
50%, did you, when you saw it listed, did you find out the bank then, or was it sort of later that you
It was about a year in that I actually started digging. I was like, why is this thing? I just kept asking myself, why is this thing still here? Right? It
because
was clearly overpriced. It was probably worth $1 million the day it was listed. And
yeah,
as time went by, it was only worth less and less because the condition was falling apart. And then I drove by it because we were looking at another deal. I'm like, okay, time to go figure this out. I found the lender, spoke to the lender. They were doing basically extend and pretend. They were giving the guy, 90-day extensions or something to try to sell it. Eventually they quit. They called me back and, we worked out a number.
so this is the point I wanted to make here is that, because this information is public, you can find it with a little bit of digging. If you
Yes,
see one of
digging.
these
Yeah.
deals, like, don't wait a year to figure out who the lender is. Go find
No,
out
no,
who the
I agree.
and just track it. And then if you see this deal continue to be listed, and frankly, if it disappears from the MLS, it that doesn't necessarily mean it was sold either. Right?
Agreed.
Usually
Totally
just
agree.
that they might have just given up, or that. I mean, oftentimes what happens with these deals is the sellers blame the broker, so they
Hmm.
yank the listing from the broker. The broker will be telling them, "Hey, look, your house is not, or your building is not worth that much,"
Yeah.
and so that's from the seller's like, "Oh, it's stupid broker, you don't know what you're talking about." So
Yeah.
they'll yank it.
Dime a dozen.
If you see the same property pop up with another broker, that's
Hmm.
also a sign that this property is like the pricing is not going to work. So you may have an obstinate seller who's not going to take your offer, but what I always advise people to do, because I've just seen this happen so many times,
Yeah.
like, put in the offer at the price that you want it for, right?
Yep.
Because if they don't get any other offers, eventually they're going to be like, okay, there was that guy who put in that offer 3 months ago. I wonder if he's still interested. They're going to get realistic when when the bank is breathing down their neck and nobody is interested in the property, and or they've had a couple of offers and they haven't been close to what they wanted to get. Put in
Right.
the offer. Don't think, oh, they're asking 1 million and I think it's only worth 750, so I'm not going to bother. If you like the property and you think it's worth 750, put in the offer. The
Yeah.
worst that can happen is they'll say no,
Yeah.
and there's a good chance that they're going to come back to you.
Yeah. I agree. The key to going forward, besides getting your finances right, credit card debt, getting all of that as you correctly listed, I would tell folks is start tracking and start getting inquisitive. I was very lucky in that one situation where it just stayed with the same broker. I still remember who it was. And, we ended up getting the deal because we found the bank, we found the person, we heard the story, and then they eventually called us back and said, okay, we're ready. And, you're going to have to do that lots of times, but you only need one of these. You only need one of these. I mean, that building now is worth 2.1, 2.4, somewhere like that.
Yeah.
And, only, 8 or 9 years later. So it's
I mean,
it's possible.
this is how it's done. And listen, these buying opportunities only come up once every 10 years or so, right? So you really
Yeah.
have to take advantage of them when they come up. Don't be the person who's like waiting around to see what other people are doing, or listening to people telling you like, oh, it's a terrible time. Real estate just crashed. It's a terrible time to buy. Why are you buying real estate now? Like,
Mhm.
the real opportunities are these when you have a correction, people are scared, financing is hard to get, and that's when you can really make the deals that will change your life. You can't make those deals at the top of the market. I mean, the deals at the top of the market, they'll change your life, but not in the way you want.
Yeah, not the way you want them to. Oh, Jonathan, you're amazing. Thank you for doing with us. I do think there's a lot of opportunity. People need to start working today to be ready. You can't get ready when the time is here. You got to get ready early. Where can people follow you, and where's your LinkedIn profile?
Yeah, so listen, these days I'm really focusing on LinkedIn. I think it's a great platform for building relationships with people. So come follow me on LinkedIn, connect with me on LinkedIn, and I post a lot, and you can join the conversation there.
Awesome. Thank you, buddy. Take care.